Good morning, everyone. Welcome to the weekly live room here at binary.com. We're going to start at 7 a.m. UK time. As always, despite the fact that the clock went back 1 hour in some parts of the world. So, welcome. We're going to take a look at the Forex market and the charts in just a second. But before we do that, as always, the risk disclaimer explaining that trading foreign exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So we thank you for your attention on that. If you're new to this concept, take a look at blog.binary.com/weekly trading room and just type in your name and email address, and you can either attend this live, as some of you are doing, or you can also register and you'll get an email when the recording is available for your viewing at any time. So today we're going to take a look at the economic calendar, then the euro dollar, pound dollar, dollar yen, Aussie USD, and XAU USD. So here is the calendar, and this week we have, today is just Aussie news, but we have tomorrow USD retail sales. Wednesday we have FOMC and ADP on the USD, which is big news always, and that could significantly impact the market, so we want to be very careful with that. The New Zealand has a cash rate on Wednesday, and Thursday we have unemployment claims on the US. That's about it for this week. So let's head over to the charts. And we can take a look at, for example, the euro dollar weekly. All right. And the euro dollar weekly chart, for example, is showing a break of our 137 top. That was a very major level, and something that we were always waiting for to see if that could break or not. Finally, we broke. Not only that did we break the 137.11 level, but we also posted a weekly close above it. So that is a key to understand that not only did we break the level, but the weekly candle was bullish, plus the weekly candle closed above the top. So anything of a bearish momentum maybe that was existing prior to here was just a correction for more upside. So if we put that into bigger context, we can see that there is potential for the currency maybe to move up to this top of that trend line right there, and then see resistance for more downside. All right. Now at the moment we're still at a bigger 61.8 Fibonacci retracement, so that itself could cause a bit of a stall right in here. So what I'm thinking of personally is seeing this level cause the euro dollar to correct a bit, maybe correct last week's candle, and for example retrace back to the broken top and use that as a support level for more upside. So that is a scenario what I think is very realistic. Now if it's not that broken top, then it could correct maybe deeper. It could challenge this bottom. I don't see this bottom though breaking that fast. There's also a trend line here, support. So I would say the broken top. If not that, then this level right in here, anything above 135, should become support for the upside to higher levels. So that's what I'm expecting on the euro dollar. Now if we do make that higher level move up, then I would say anything in the low 140s could be the target. Eventually though, maybe even up to 143, which is the 786 fib of that last downside. All right, and that could become a resistance for maybe a big downside. We'll have to see. That's something that we can discuss and view later on, because that's still far from now. So as I expected, this is becoming a 1A, B, and a third wave correction. All right, that's what's unfolding now. And we were, of course, hesitating here, as always. One should, because this is a bigger top. And it could have been something like this as well. But that has now been invalidated. And the former scenario that I showed you is becoming a reality. All right. So that's the euro dollar. And let me see if I want to add something. We can go to the day chart maybe to see if there's anything. But this is the long-term picture basically. And the day chart is kind of, if anything, confirming largely the bullishness, right, with this beautiful uptrend here. So any hook back to this. Not only is this a broken top right in here at 137.11, but you can see a small pause within the upside. Usually when currency goes back to that level, it acts as a bouncing spot. So you can see that whole 136.50, 137 level becoming a major support level, not only in the very far past, but also in the very near recent future, recent past, sorry. This was definitely a top right in here, and this is a small zone, what you can call a supply-demand zone, which means it acts as a support basically when currencies go back. So there are multiple reasons there for the currency to bounce. Now, will we necessarily move down that far? That doesn't have to happen. If we do break above this top, then we can also see there's a high likelihood of continuation. All right, so something to keep an eye on. The next one, pound dollar. Pound basically had a very indecisive week with the doji, which means that the open and close were equal to each other. And we had a wick at the top of the weekly candle and at the bottom of the weekly candle. That doji sets itself basically at a very major resistance level. This, in theory, could still be something like this going on, which means more heavy downside could follow. But we're not sure about that because obviously the most recent price action was very bullish. So I'm still in a wait and see mode on the pound dollar. Obviously, we are at a very big resistance spot, looking at the red line and black line. Obviously, we're also looking at the smaller time frames in a very big uptrend. So either the uptrend is going to win and push a bit higher, or the resistance is going to win and it's going to turn into a downtrend, most likely. So I have to see which one will be the winner. If we put that into context of the bigger picture, you can see why this is such a big resistance. Look at those tops there, and look at the black line, trend line connecting those tops there. So, no, this is very cautious territory. Be very careful here because resistance like that is difficult to break. If it does break, we do maybe have some space, just a bit up to the next resistance. Other than that, I'm taking a close look at this weekly level right in here, which is 159, because if we break below 159, we can see maybe that bearishness come into the market to at least challenge these bottoms right in here at minimum. All right, so those are the key levels, 159, and the tops, of course, around 163.30. Anything below, between that, is difficult to say because it could still be either bullish or bearish. If we do break below, lower, and we break these bottoms eventually, then there could be definitely some space to, for example, this bottom here at 140 and 130, and there could be some bearish momentum. For bullish momentum to really come into the market, we would not only need a break of 163.30, but eventually of 167.50 to see higher levels. Those are the key levels. Let me go back to the daily chart and see if there's anything to add. Here you can see this is a key bottom right in here on the daily chart as well. And these are becoming key tops. So nothing to add really, besides maybe this trend channel that you can keep on your chart. If we break below the trend channel, that could be a first warning that that upside is not materializing. So the purple trend channel, an extra feature that you can add. Let's move over to the dollar yen. The dollar yen is in a very interesting situation. Now, first of all, it could be basically completing a triangle right here, 4 more upside up to 110, maybe even 120, maybe even 125. All right. Why 125? Well, basically there's a top right in here that could be resistance. So anything of this upside is basically still challenging that top right at 125, and that could send this currency lower again. All right. So we have space up to 125. But obviously we can stop at these targets as well, which are the Fibonacci targets. So if you look at it back in the, let's zoom in back, we can see, for example, a very strong move up here, and now we're in a triangle. So if that triangle completes, we could see that continuation to the upside. That's basically what it boils down to. The oscillator is back to the zero line. So that is a indication that this triangle could be finished as well. We bounced off the 382 fib, the 38.2% Fibonacci retracement. Another reason that this is looking like a very shallow retracement. If we then zoom into the daily chart, we can see, for example, an A, B, C, D, E. That could be another reason that the triangle has been completed. Now, a confirmation of that the triangle has been indeed completed, would be a break above this green line. All right, when we break above there, that would be indeed the indication that we're looking for the extra confirmation that wave 5 is in motion. If this does not turn out to be a wave 4 or a corrective triangle, as I said, like this, then price would need to break below this bottom, which is 95.80. So that will be the invalidation level, and then something else is happening, and maybe a three-wave correction like this is taking place. And we can see downside to 91 and 90, where the market could still move up from there. That would be the alternative if we break 95.80. I'm not assuming that at the moment. Why? Because if you look at if we zoom in and look at the 4-hour or maybe even the 1-hour chart, you can see a neat 5-wave structure here, which means that there's a high chance that this is a correction and we're continuing for more upside as we speak. So definitely something of a bullishness coming into the market right in here, which we should expect after the completion of the triangle. So the currency is behaving as I expected and wanted it to do and see. So basically, if we break above maybe a trend line like this, we can put on our charts, and a break above that, and then of course a break above the green line, indicating and confirming that bullish count. That's the dollar yen, expecting bullishness as we speak right now. In fact, AUD USD. Well, the AUD USD is in a tough spot because of the fact that it has already made nice moves to the upside as expected, but we've reached the 50 fib, 50% Fibonacci retracement of this entire downside. That was a huge downside this year, lasted very long and made a lot of pips to the downside. So we're still in an uptrend though, but we are not breaking this level, which is logical. So we can either expect one more move up to the 618 and minus 618 at 99, or we can correct lower like this. So when do we know which one is effective and active? Well, definitely a break above the top would indicate that we're probably moving up to the 618. That's the first of all, the 97.50 is key. Second, any move basically down towards below, I mean anything above still 94 is still potential bouncing area, because we have a top in here, we have a triangle in here that could all act as a support level to move up to 97.50 or 99 later on. So 93.80 is crucial. Anything below 93.80 would seem more bearish, and everything above bullish, and the extra confirmation is above 97.50. So still bullish on the AUD USD, in fact, above 93.80, and maybe a level like this around 95, which used to be the top right in here, as you can see. That could provide maybe 95, that support needed for the up move. Let's take a look at the weekly chart, and you can see that basically here we had a bearish week after hitting that 50 fib, and we are approaching the zero line, so we have to be careful. But if this will keep up and keep retracing to the upside, but maybe eventually we will bump into bigger bearishness when this does hit the zero line here for more downside. 93.80 and even 92.80, which is the weekly support key levels, just like 97.50. Let's take a look at XAU USD. right in here and zoom out to the weekly chart, or maybe the daily is better. Nothing much happened really last week on XAU-USD. The last 5 days, just a bit of upside, and we did push through that orange line. So we are getting two breaks, not only a break of this purple channel, but also of the orange resistance line. So we could push up maybe to the red resistance at 1435, and if we break that, up to 1520, which would be the targets, right? Now the break hasn't been that powerful as yet, so we'll have to be a bit more cautious maybe about that break. On the weekly chart, we had a bullish week though last week, as you can see. So anything of a retrace of that last week's candle could see buyers step in to push it higher. All right. So last week's low, usually speaking, would not get broken at 1310. Any downside would be a retrace, most likely for more upside. Now that we've broken maybe this orange line and the purple channel on the daily chart, we could expect this upside continuation, at least to challenge this top. If not, move higher and challenge this 1520 bottom right in here on the left. Well, that wraps up the four currencies and one commodity that we're looking at. All right, let me show you again the link that you can use for registering to our session here. If you cannot make it live, then you can always look at that link, look at the video. But it seems that the PowerPoint is freezing up a bit, so no problem. I think you can always scroll back, in fact, to the beginning of the session. Oh, now it's working again. Good. There is the link, so please, if you would like, please pause it at blog.binary.com/weekly trading room. You can register. Thank you so much for being here, and looking forward to see you next week. That's the same time, 7 a.m. UK time, or also now 7 a.m. GM time. In fact, we'll be back on Monday. We'll take a look at how October has finished and how November will look like, because the month of October will be finishing, of course, this Thursday. I wish you good trading in the meantime. Cheers.